Hi, all. Good morning, good afternoon, and good evening, depending on where you are. My name is Raymond, and it is a pleasure to be here at UXDX community event. I'm so excited to give this talk today and share what I've learned about designing payments with all of you here in the audience. Our agenda today is pretty straightforward. I'll start with a basic intro and the basics of payments, and then go into the meat and potatoes of this talk, which is designing payment products. I'll also talk about some future ideas before we wrap up. My hope is that after this talk, you'll understand some basic key tenets when it comes to designing payments and feel empowered to do so successfully. Like I said, my name is Raymond, and I am a design leader with years of industry experience at consumer and enterprise companies such as Medium, Salesforce, and Accenture. I am currently at Marqeta, where I lead a team that builds products to enable and elevate modern money movement. And just a small disclaimer before we begin, the thoughts that I'm sharing here belong to me and myself only. I am not representing Marqeta or prior companies that I have been a part of. So let's talk about payments. Payments as they exist today look pretty different from what it was in the past. We've gone from exchanging literal goods in a barter system to physical cash, and then now to the zeros and ones of digital payments. And with each evolution, the ease and speed of payments continue to increase. So, quick question: who of you on this call has made a purchase or sent or received money digitally? Hands up, leave a comment. I can see all of you, but I would imagine that most, if not all of you, has done so. Especially this is 2024, right? Digital payments is everywhere, and digital payments look so simple on the surface. Maybe you go to a shop, you tap your card, you wait a few seconds, boom, you're done. But when you look under the hood, there's such a huge amount of complexity. This is what it might look like behind the scenes. Let's say that you're going to a coffee shop, you're using your card to pay for a cup of coffee. You tap your card against the POS terminal, which then passes the info to the merchant bank and then to the card network like MasterCard or Visa. And then the network will then validate and passes over the information to the cardholder bank, which then approves it, send it all the way back to the network, to the merchant bank, to the POS terminal, which then displays the authorized message. And then now the transaction is complete. And when you think about payments, it's really not just about buying things at a store. You can think of things like money movement more generally. For example, you want to send money to a friend to pay for your part for dinner. Maybe sending money to a family member who live abroad, or paying out vendors, or employee salaries, or getting paid as a creator, and so on. And a lot of you on this call are probably designers, and you might be curious or maybe a little bit afraid of what it means to design in this space. Uh, there's definitely some unique considerations when it comes to payments specifically, but the good news is that a lot of basic design principles still apply. So let's dive in. So when we think about transactions, they are so common that maybe we don't really think about it all that much. But if you think about the data that is contained in each transaction, it's rich. It's truly rich in information, like who are the parties involved, how much was it, when was it made, and so on. Here's an example of a purchase receipt, which displays data like store address and contact info, the transaction date and time, the detail of the merchandise itself, the transaction amount and the breakdown, payment method and authorization, and so on. But this transaction also contains data that is not shown, like cardholder address, fraud rating, merchant category code, transaction type, and so on. And my point here is that while transaction data is rich, you still have to remember that transactions exist in many different contexts. For example, buying goods from a shop would be different from sending money to a friend or making loan payments. In each of those scenarios, the user goals are a little bit different. So you should think about ways to support them accordingly. Don't show everything all at once in all scenarios. And this is also applicable if you're dealing with commercial payments. Like, for example, you're paying a vendor for software licenses or goods or whatever it might be. In this case, having information around things like approvers or department or invoice number and so on, those would be useful. And last but not least, be mindful of nuances when it comes to payments ecosystem. In the US, for example, credit cards are a pretty common way to pay, but it is also more expensive for the merchant as compared to, for example, Europe. Or in some countries, paying cash on delivery is still a common payment method as well. So think about how these differences would influence your design and product decisions. You have to keep in mind that you are always designing product and features in the context of an existing payments ecosystem and never in a vacuum. So, in a nutshell, you gotta know your users and their use cases. Think about their goals, what would be useful in those contexts, and don't forget about the payments ecosystem. As a designer, you have to be diligent about this. What data or what research is available to support your hypothesis? How would you collaborate with your stakeholders to answer these questions? And so on. In tech, you often hear the phrase move fast and break things. But this is not necessarily the best approach when you're dealing with payments because we're playing with a different set of rules. People are so sensitive about sending and receiving money, and mistakes can be costly, literally. Might sound counterintuitive, but frictionless experience can be harmful in the context of payments. Preventing human error by adding a little bit of friction is easier than trying to undo transactions. So, a quick story time. A couple years ago, in 2021, a Citibank employee accidentally sent the full amount of a loan, um, which is $900 million, dollars, instead of just the interest, which is $7.8 million. The software, as you can see here, isn't exactly clear. So the user is supposed to check multiple checkboxes here, not just one, to override the default settings. And this still went through despite the multiple layers of approval as part of the process. So the moral of the story here is that clarity is critical. You can't depend on processes alone to prevent catastrophic human errors. So, for example, how would you make this workflow clearer? Maybe you add a summary screen before executing the transaction. Maybe you put in a delay or whatever it might be. And when it comes to payments, really speed is secondary. Clarity is more important. And adding friction in the product experience is actually preferable. And to build on that, clarity also means being transparent with users and building trust with them, whether it's things like fees, conversion rate, or when the money will arrive, and so on. You might be tempted to do dark patterns to hide some of these. But when you think about dark patterns, they might be beneficial to the business in the short term, but they erode trust in the product in the long term. And interestingly, there's also evidence that being transparent might actually be beneficial to the business. In the US, unbanked lower income consumers often use check cashing places to liquidate their money in spite of the high fees. You can see here the list of fees that are associated with the check amount. But the transparency here means that the consumer knows exactly what they're getting and how much they're getting in the end. Whereas at banks, fees like monthly account fee or overdraft fees and so on, those things are less visible to the consumer. And they can really wreak havoc on people's finances, especially if you live paycheck to paycheck. And we've been talking about digital payments and how speedy and convenient it is. But in addition, there's also some opportunity around access and equity. Cash, in particular, can be a little bit inaccessible to people with visual impairments, those who are blind or with really poor vision. And making them accessible would mean major changes in our current infrastructure. Now, I can speak on all currencies, but the US dollars is definitely one of those because all the bills are the same size, right? Whether you're looking at a dollar bill or $100 bills. So when you're building products or features in digital payments, accessibility should be part and parcel of your process. Making an accessibility as you're designing and building is much, much easier than trying to fix it after the fact. Now, this talk isn't focused on accessibility specifically, but I'd be remiss if I didn't mention that accessible products would also benefit every person, every user that use your product, not just those who have disabilities. And earlier I mentioned how transaction data is really rich in information. And with the explosion of digital payments, different products are also experimenting with the social aspects of transactions. But this can present privacy risks if you're not careful. So if you're building digital payment products or features, treat your user data with the utmost care. Another advantage to digital payments is also how easy it is to share your financial information across accounts. With a click of a button, you can connect your mortgage payment, for example, to your bank account. But it also doesn't mean that everything should be shared everywhere by default. Doing so might increase privacy and security risk, not just for you, but also for all the parties involved. So we should empower users to have control over their financial data and access. So, needless to say, trust is a key tenet when it comes to payments. Strive to build products that are transparent, accessible, and respectful of user privacy. The last point about security and privacy is especially important when we consider fraud. In the US alone, there were about 2.6 million fraud reports in 2023, and this resulted in about a $10 billion loss. This is a significant amount of money, and I can only imagine the numbers being even bigger when we go outside of the US. And the unfortunate reality is that fraud is inevitable when it comes to payments. Digital channels have made it so much easier for bad actors to scam people out of their money. And then now with AI, things have become even more sophisticated. In one extreme example, scammers were using deep fake videos in a live call, mind you, not pre recorded footage in a live call, which is wild, to trick an employee into paying out $25 million. Those AI generated videos that you've seen on social media or whatever, those aren't just silly tricks. Bad actors are actively using those new developments and new technologies in AI for malicious purposes. But on the flip side, we're also seeing some rise in AI powered detection and mitigation methods. So, in essence, the system would first establish a baseline of what normal looks like, and then monitor the data continuously and flags deviations as it occurs. And in the long term, it also continuously adjusts its logic and parameters and as new data comes in. So there's definitely some overlap here between this point about AI and the previous talk. So yeah, in the current day and time, you kind of have to deal with AI and think about that and how that might impact your designs and products. And of course, I think some of you, if not most of you, have dealt with fraud, as the victim or being on the receiving end of fraud, which is so stressful, right? Who wants to do that? So it's also essential for you as designers and builders of products to make fraud prevention and mitigation a part of your product to mitigate those negative impacts. You'd want to alert the user in real time and automate protection to stop the bleeding first. And then you'd want to provide a shortcut to reverse if it's a false positive, but also create a pathway to recover if it is indeed a fraudulent activity. So when it comes to fraud, you have to deal with it head on. There's no ifs, ands, or buts. Bad actors are always lurking in the background and they will pounce at every opportunity that comes in. You can either be caught flat footed or be prepared to deal with it. Another unique thing about finance is how regulated it is. You will be dealing with multiple parties in the mix, like banks and networks, MasterCard, Visa, UnionPay, and so on, who each has their own compliance requirements. And not to mention also that different types of programs have different requirements. Maybe a debit, for example, debit program would be governed and bound by different set of rules from a credit program. And these requirements could also vary. Some might be pretty high level and generic guidance, while others can be very, very, very specific, like this example of card art display from MasterCard. And of course, I'm not a lawyer, you're not a lawyer, and that's fine. You don't need to know every single thing off the top of your head, but you are still responsible for your designs and your decisions. Do your homework. Review your designs with the legal and compliance experts at your company. In a nutshell, don't mess with the law and don't assume things. So far, we've been talking about payments in a present context. But of course, payments continue to evolve and exciting developments are happening all the time. When I think about the future of payments, these come to mind. The future is fast because of real time payments, connected thanks to open banking, and smart made possible by programmable payments. And payments is a constantly moving field. And as designers and builders, you should at least be aware of these developments so that you can continue to build and evolve your products and services. Now, real time payments are kind of the new quote unquote hot thing in payments because it enables money movements to be completed in seconds, not hours or days, with older methods like ACH or wire transfers. And this has a huge impact on liquidity and also potentially financial inclusion for more. But on the other hand, there's also the increased potential for fraud due to the instant and irreversible nature of real time payments. And speaking of the US, the adoption of real time payments in the US has been a little bit slow compared to other geographies like India, for example, with UPI. So, right now in the US, at least, coverage is a little bit patchy at best. I've touched on this a little bit earlier, but open banking has also become increasingly popular today. It's never been easier to share your data across companies with services like Plaid, for example. For consumers like you and I, it means that we are in more control of our financial data. And for companies, this could also mean lower barriers to building and offering financial products, even if it's not a core part of their offering. And this is what embedded finance is all about. But it's not without its challenges. Again, when you share data with multiple parties, they will have varying security levels, and your data will only be as secure as the weakest link. And additionally, considering that there is still a large segment of the population that is unbanked now, open banking might disproportionately benefit those that are more well off and tech savvy. And last but not least, programmable payments, which isn't really a new concept per se. For example, think about your Netflix subscription, right? Where you're automatically paying a certain amount at a regular interval, like monthly or annually, for access to something, to a service. But this could go way, way, way further. The conditions that is set for programmable payments can be said to be pretty sophisticated and complex, especially in commercial use cases. For example, Um, Send payment if the shipment has arrived at the East Coast warehouse and two supervisors have signed off of inspections. So we're kind of combining things like geo, time, role, and so on and so forth. And when you think about smart payments or programmable payments, automated execution like this would reduce the operational overheads and human errors while at the same time increasing safety and transparency. There's also the potential for more dynamic pricing models beyond your basic usage tracking. Of course, on the flip side, it could be less flexible, especially during abnormal circumstances like a natural disaster or a pandemic, which we're all pretty familiar with. And last but not least, there might also be some privacy and ethics questions due to increased surveillance. To wrap up, I'd like to remind you of the key tenets that we discussed earlier when it comes to designing payments. First, you got to know your users and their use cases. You want to prioritize clarity over speed, continue to build and maintain trust, deal with fraud head on, and last but not least, be compliant with laws and regulations. Payments, whether you realize it or not, is so central to our lives. Everyone needs to pay and get paid, and payments is how we make it happen. And that is all. Thank you so much for your time and attention today, and I hope that the talk has been insightful for you. I've included here a QR code link where you can get a copy of the talk and give me some feedback. And would also love to connect with all of you on LinkedIn as well. Thanks again, and I think we can open up the floor to questions now.
Excellent. Thank you very much, Raymond. That was really nice kind of deep dive into some of the complexities that are hidden behind the scenes in payments.
Absolutely.
I'll jump in with the first one because this is actually something that happened to me. I now have muscle memory. Like you said, you need to introduce some friction in payments because you don't want people to make mistakes. But when I'm doing my payments, I almost have a muscle memory of I have to do these 3 different taps in order to make a payment go through. And then I accidentally did a bad payment because I wasn't using it as a way to validate my payment. I just knew to do the payment, I had to hit these 3 different taps. So is there something else that can be done to try avoid that? Or I'm just the silly end user, but that muscle memory that people might build in with the friction that you introduce?
Yeah, I think there's a couple of things there. For example, like maybe there's some sort of learning that we can do in the back end, right? If we see that, hey, you're sending a lot of money frequently and maybe more than usual, is everything okay? So kind of like trying to detect patterns or kind of like interaction patterns and maybe present additional friction or kind of guardrail in some cases. Um, and also, I think in some cases, again, depending on what you're trying to do, right? If it's maybe for like a bigger amount, maybe we give you a certain warning, right? Maybe if it's a new person that you're sending money to, maybe we present an additional speed bump. So I think understanding kind of like what some of the use cases are would be helpful in terms of introducing potentially additional friction points. I think Venmo does this well. An example that I had with the pausing in terms of here, I don't know if I can zoom in or not, but it says here you cannot pay or change the same person in the same amount within 10 minutes, right? And also with Venmo, if you're sending payment to somebody new that you have never sent a payment before, it'll ask you for like additional info, like the last 4 digits of their phone numbers. And those kind of verification don't show up all the time. So it only shows up in certain cases. So I think understanding the what you call it intricacies of some of these use cases would be helpful.
Brilliant. I like, there's a good example with I can't remember which app it is, but when you want to delete something, it pops up a box and you have to type delete instead of clicking a button. So that's just an extra, because then you know very clearly that you're deleting something.
Yeah, I think that might be GitHub or something, because I remember having to do that when I'm trying to like delete a repository. But yeah.
The other thing with fraud, so you were saying try to be always vigilant and always kind of thinking about fraud. How do you protect against something like an AI video chat with your boss where they're telling you to do something? How do you protect against something like that?
That's a tough one, isn't it? Yeah, I think with something like that, there's something that you can do in the product itself, right? But also something that has to do with kind of like the system overall, the organizational system, dealing with humans, right? Like, for example, hey, maybe if you're sending, this much money or like over a certain amount, you need additional approvals from, your supervisor or whatever it might be. It's not a perfect system by any means. But I think when it comes to kind of like AI powered stuff, it's tricky and it's still new, right? Like cases like that I shared, those aren't exactly happening every single day, like all the time. Those cases are super targeted, right? They know that they're targeting this specific person in this specific company, and they know who the people are, right? Who the bosses are, who the VPs are, and they're slowly kind of gathering information and data to craft those videos and those deep fakes. So unfortunately, yeah, like I don't have a good answer to that, because I think it's um, there's multiple layers to that. There's like things in the product itself. There's things in terms of like the organizational structure and systems that you have to take into account. But yeah, it's rough. I don't think there's like a clear answer now, and also like the fact that it's changing constantly is also a challenge.
Yeah.
Yeah.
I guess that keeps things interesting for designers going forward, trying to overcome. It's a cat and mouse game.
Oh, absolutely. And I think that's always true with payments, because, like I said, fraud is such a big part of it, right? Like when you're designing products in payments, you have to think about like the worst case scenarios, right? Like how might we prevent potentially fraudulent activities? How do we deal with that? What is like the right balance? And ultimately, we're probably not going to get it to zero, but how can we minimize it as much as possible?
Brilliant. Well, that actually brings us to time. So I just want to thank you once again, Raymond, for that talk. I enjoyed it, and I hope everybody else out there did as well.
Thank you all. Appreciate it.